Despite reporting higher revenues, brewery giants in Nigeria recorded a loss in their third quarter earnings, driven by rising input costs, exchange rate fluctuations, and inflation, among others. Oluebube, Nwosu, consumer goods analyst at Vetiva Capital, joins me for this discussion. Thank you so much for joining us today.
Thank you for having me.
So, talk to us about these numbers from the brewery giants. We've seen a couple of numbers. I was just looking at Unilever not too long ago. The report you put out on Unilever, and numbers weren't bad, weren't too shabby. But talk to us about the numbers from the brewery giants and where the pain points were.
Thank you. So far for the latest period, we've seen Nigerian breweries and Guinness actually release their results. Nigerian breweries being the market leader, while Guinness also, coming in as one of the top players in the space as well. For both of these companies, we've seen a similar pattern in their results, where they notched really significant improvements in their top line, their revenues, mostly driven by price increases. So beverage consumers, especially beer consumers, would attest to the fact that their favorite drinks have literally doubled in prices, or some even more so far this year. And that's responsible for the higher revenues we're seeing by these companies. But it doesn't just stop there. They're not just raising prices because they own the market. They're raising prices because they have to also recoup their costs. Right. So they're seeing higher costs driven by inflation and driven by FX devaluation, of the Naira devaluation, right? And all of that has made them increase their prices. However, they're also trying to keep in check with demand, the volumes. So there's a consideration between increasing your prices to cover costs, as well as keeping prices such a way that you don't lose a lot of volumes, which is very important so that you still have consumers even while you go through this rough patch, such that when you're done with the rough patch, your customers still remain with you. Very important. We also saw that beyond their top line growth, we also saw that finance costs also grew, especially for Nigerian breweries, and that's because of the size of their debt profile. But that's one of the reasons why they are also fundraising currently. And once they've settled all of these obligations and that is out of the way, then their bottom line can breathe better.
Now, they've been able to successfully pass on price increases to their customers, and there hasn't maybe not been a significant pushback, because when people are sad, they drink. When people are happy, they drink. So both ways, the company wins.
Yes.
But my question is, for how long is this going to continue? If the FX issue is still there, we see it from quarter to quarter.
Yes, so we can see it as a temporary issue. So if we look at, it still depends on how much the rate swings. And so when in a quarter where you have more stability, these losses are lower.
When you say rate, you're talking about exchange rate. Because it would appear that we're going to see that volatility for the foreseeable future. That's what analysts are telling us.
So the volatility again it reduces. So when we went from 400 to 750, that was a wide swing. Right. When we went from 750 to 1,200, that was a wide swing. Right. When we went from 1,200 to 1,600, that was also a wide swing. But by the time you're going from like 1,600 to 1,650, 1,700, the swing reduces. And that would also now tell better on their own financial performance. We're also seeing them improve on their local sourcing so as to reduce their demand for FX. So this is really a temporary situation for them. And we're looking that by next year, we should start seeing their bottom lines breathe better.
How much of the local input can they source? Because I know for like an Okomo now, obviously different story. Okomo has been able to, has been exemplary in that aspect. But the question has always been, to what extent can they? If it's backward integration, local inputs. A lot of the machines we know are brought in are imported. So where are they?
So for now, it's going to be supporting raw materials. So majorly the grains they use, and it's not going to be for the majority, because it takes a while to properly do a backward integration that can cover up all of your demand, right? So, but moving from 10% local sourcing to 20% local sourcing is a lot of FX savings, and that's what they're all looking at doing. How much can we do in a quarter? How much can we do in a year? That's more important. Then, by the time we sustain such strategies, over 3 years, over 5 years, you can see that probably over 60% is now locally sourced. But for now, any respite that can be gotten from the FX demand is very important to their financials.
So what is the earnings outlook? Guinness, Nigerian breweries. What is the earnings outlook?
So currently we have a valuation for Guinness, and at its current trading price, is still a buy for us, because we see the like I said, FX losses reducing quarter on quarter, such that at the end of the year, the loss being declared is not as significant as had they had maintained it from Q1 in their losses. So not just that, we also look at the ability to maintain market share as being very important for these players. So for us, that's it. We do currently have a target price on Nigerian breweries, but for Guinness, for us, it's still over the long term, it's still a solid company.
For Nigerian breweries, how's the stock performed so far this year? And I mean, how have investors reacted? Because I know it hasn't been fantastic. I mean, dividend yield, etc. Investors haven't been too.
Yeah, it's been fair. It's been swinging sideways.
Right, okay.
And to be fair, we saw some momentum around the period where the rights issues was announced. We currently see that the price is for a good point. It was even trading above the rights issue price. Right. So we still see that many people who are staying in the company are people who are thinking long term over the hold of these companies in the space, because it's a 3-company industry. So once these headwinds are out of the way, they still own the market.
That is for Guinness.
Nigerian breweries and international breweries.
International breweries. For instance, I mean, I know that there are a lot of common denominators running, across the 3 companies. But in terms of that, the company that has the best shot at, coming out on the other side faster, quicker than the others, which name comes to mind? Or what do the numbers tell you?
So they all have their advantages. So Nigerian breweries and international breweries have raised funds to clear their obligations. Okay. While Guinness has sold a majority stake to a local player, meaning they no longer have to report in dollar terms. So it also reduces the amount of intercompany loans that can also affect its own FX losses. So they are taking individual approaches to solving the same problems.
And how has all of this impacted the ability to expand, the operations or plans or whatever? I know that some companies do have expansion plans, but
so during this period, many of them have taken a maintenance approach, right? So this is not the period for them to spend even more on capex, because they have to conserve the dollar they have for their core production. So right now we're seeing a slowdown in capex spend vis-a-vis their revenues.
Obviously makes sense.
Yes.
So for the market overall, I mean, the Q3 numbers overall, I was I saw Unilever.
Nigerian breweries or Guinness. So for what we see so far, for Guinness, it's their Q1 fiscal year, this current period, while for Nigerian breweries is their 9 months so far. Nigerian breweries notched over 700 billion for the first 9 months of the year. At such a rate, they could possibly cross 1 trillion in revenues for the full year. For Guinness, looking at their current run rates, they could also cross 500 billion for the full year based on their top line numbers for the quarter so far.
And where does that leave your forecast for, dividend yields for this company payouts going forward? So
our current latest forecast for Guinness, we're not forecasting dividends yet, because you have to get out of the woods first before you have cash to return back to investors. But from the following fiscal year, we're projecting that they'll be able to continue paying dividends.
I mean, they have to make it all worth it for the patients on the part of investors.
Definitely.
So we'll leave it there, Oluebube. Thank you for talking to us today.
Thank you for having me.
Oluebube Nwosu, consumer goods analyst at Vetiva Capital.